Hello everyone and welcome back. My name is Greg Furman and these are the market positions for August the 15th, 2017. Now our first trade for tonight is going to be again in the Forex market. What we're looking at is the US-Canadian pair. Now the initial sell signal from VantagePoint came 3 long months ago where we had our first triple EMA cross. This led to multiple retracements but a major move from the 136 level all the way down to 124 where it finally appears to have bottomed out. Now the current VantagePoint indicators, our neural index is turned back to the upside, our predicted short, medium, and long-term differences. That of course is how VantagePoint gauges the strength of the trend. They are all above the zero line and moving higher. Our predicted MACD has crossed our trigger from heavily oversold territory. And of course our all-important predicted RSI, we've had a little bit of a retracement here, but we're holding not just above the 50 but above the 60 level, and we're starting to turn back to the upside. So with this, our key VantagePoint 18-day predicted moving average is coming in at 126.64. This is the level that I talked about in this week's Forex weekly outlook, that we're looking for this area to hold. Now at the market open on Sunday, the market actually came right down to this exact level. You can see here the actual real data. We hit a low of 126.65 on Sunday, an early Monday trade. That area is held and we've bounced all the way up to the closing price of 127.21. So it does look pretty decent for a move higher. Now when we look at our individual crossovers, our short term is still up, medium term looks very good, and that all important long term crossover, which I've talked about on numerous occasions, we don't get a lot of these on a per month basis. Sometimes we only get one per month, so this could be it. So it does look like it's the US CAD pair. With falling oil prices, we should move higher. Now after doing all of these checks, then and only then do we go into our all-important daily report. Now the daily report's primary function is to identify the day's trading range. So we try and utilize that. We know we have a massive support area at 126.66. So where we're putting our stops is pretty easy. We're going to go about 40 pips, 50 pips below that 126.64 area. So tomorrow we're looking for less of a pullback to confirm this new uptrend. We're looking for a pullback to 126.80. We're then going to target 127.47. Now throughout the course of the day with currencies, once they hit their high for the day, they often go after the low. So we may see a big push in the Asian session. This video of course being produced at 6:20 p.m. Eastern Standard Time on Monday night for the next day's trading. So we want to be patient through basically through the Asian session and of course the European session. But the US-Canadian pair, guys, we always want to make sure we're focusing on that during the North American session between 7:30 a.m. and 11:30 a.m. Eastern Standard Time when the Canadian stock market is open. So not a bad move, but if we look at this particular move on these charts, we could be looking at a substantial retracement in this corrective move. Potentially, if this gets going and oil keeps moving lower, we could easily see the 130, 132 area. Now our second trade for tonight is going to be in the ETF markets. We're looking at shorting the S&P 500 through the ProShares Short S&P 500 SH. Now whether you're going long or whether you're going short on the equity markets, I know that there's a big divide here, guys, but ultimately these equity markets, particularly the Dow, the S&P 500, they're grossly overvalued in my respectful opinion. But again, we can't base our trading on opinions. We have to look at the indicators. Now, we still have this looming crisis with North Korea, which is likely going to keep the downward pressure on the equity markets. So selling into rallies is certainly a decent play, again, in my respectful opinion. When we look at this, we've got solid trend line resistance, coming in at about the 33.20 area. The major indicators from VantagePoint are turning lower, indisputably. Our neural index, our predicted short, medium, and long-term differences, our strength indicator, everything is pointing down. Now that doesn't mean the stocks can't move higher in the short term, but we use that move higher to set our short position. So when we're buying this particular Again, ProShares Short, we're looking, basically we're betting that the S&P is going to go lower. Now, I would like to see that we are holding above the 40 line here. And again, I think a little bit of relief came into the market because nothing else has been said between North Korea and the US, but that doesn't mean that this conflict is over. So when we look at our short-term crossover, which again is a very important crossover, it is pointing down, but the medium term is still pointing up. And of course, the long-term crossover is still pointing up. So it's basically telling me that we're still probably going higher, meaning the equities, the S&P 500, the Dow, they're all probably still going lower. So the indicators here, unless we break below this 40 line, this could be nothing more than a corrective move in thin illiquid trade on a Monday. So for Tuesday, we're looking to buy this particular ETF on a dip. So what we do is we look at our closing price of 32.89. For tomorrow, we're looking for a pullback to 32.76. We're then going to target 32.90, but on an intraday basis only. Again, ultimately, we're going to be looking at a bigger move to the upside here, potentially back into this 34.50 area.